NVIDIA. Shares up, about 29% over the last year. It's run into some problems. AI doesn't seem like it's as hot as it was. Growth rates are starting to come down, even though they're explosive. What kind of data do you have here on NVIDIA?
Yeah, it's tough to maintain growth rates that NVIDIA had. At some point, the law of large numbers catches up to you. But, when I think about NVIDIA, I just think about overall, when you look at the way the world is moving right now. And I'm not talking about just business. I'm just talking about the entire world. Where is the money flowing? And without question, an enormous percentage of the money is flowing into AI and generative AI. So, if we look at IT budgets across enterprises, and these are large companies, but I think you can tease this out to the smallest companies in the world. Everybody's doing the same thing, and they're overwhelmingly prioritizing generative AI spending as their top spend in a unprecedented way, even ahead of security. And so this, for us, underscores the massive tidal wave of cash and wealth that is being shifted towards exactly what NVIDIA is the best in the world at, and that is producing generative AI and empowering those structures. And so, NVIDIA at this point, I think, is the recipient of a massive tidal wave of cash. I think if we look at it versus other semiconductor stocks, we do see AMD kind of creeping up in terms of web visit growth. That shows us that when NVIDIA runs out of inventory, or if NVIDIA gets too expensive for somebody, AMD is the next one that they look at, and AMD is starting to catch up in some way. So they're a good second place bet, I think, here. But when we look at NVIDIA, really the question isn't, will this company grow? I think what Wall Street's wrestling with is how fast will the company grow? And that's a pretty good position to be in. It's the type of position that we saw out of Amazon and Netflix in the early days of the multi-decade trends that propelled those stocks. I think NVIDIA's in the same spot here. If you're a short-term trader, yeah, you can make the argument that Wall Street got ahead of itself and that the growth rates are already priced in. But if you're looking long-term, there is still clearly one winner from a massive tidal wave of cash that is coming into this space.
AI has the potential to change almost every aspect of our world, maybe more profoundly than anything that has happened since the Industrial Revolution began in the 1760s. The digital world's routine operations are already being automated. By the May 28th will be a significant day for NVIDIA's shares. It will then release its first quarter fiscal 2026 results. Earnings reports are one of the few occasions a year where investors receive information about a firm, despite the fact that they may not be the most thrilling event. Since the last time we heard from NVIDIA, a lot has happened, and the stock's negative outlook going into this date is notable. I believe that after the May 28th earnings announcement, the stock may be ready to soar higher, negating the need for the pessimism. Why am I so sure that the company's first quarter results would be strong? Its principal customers have already affirmed their intention to maintain the current situation. Visuals processing units, GPUs, semiconductors that specialize in complicated computing operations are manufactured by NVIDIA. Their early applications were in gaming visuals and AI model training, which is currently their most popular use. The company has achieved an astonishing 90% plus market share in data center GPUs because to its superior GPUs. The largest customers of the chipmaker have reduced their purchasing, which is the main worry going into the quarterly report. The stock price still has a lot of high expectations, therefore investors are concerned that it won't meet them. But after hearing from the AI hyperscalers that purchase a lot of the company's GPUs, it's evident that data center spending is accelerating. One of them, Meta Platforms, has even increased its capital expenditure guidance. NVIDIA's steady growth is important because the stock's current valuation assumes that it will continue to grow at a rapid rate. The difference between the trailing and forward price-to-earnings ratio, PE, shows how much analysts expect earnings to grow this year, with the stock trading at 38.7 times trailing earnings and 25.7 times forward earnings. That projects growth of roughly 51%. Nevertheless, this will be the last quarter of the year when NVIDIA's PE stays normal. Investors shouldn't be concerned when it discloses a decline in profits because it had to take a $5.5 billion write-off this quarter due to a change in export limits to China. Growth is the actual metric to monitor, and it is anticipated to remain robust for many years to come. Although one-year returns are pleasant, investors have an advantage when they keep their eyes on the 3 to 5 year horizon. CEO Jensen Huang provided them with some guidance, stating that NVIDIA anticipates data center capital expenditures to increase from $400 billion in 2024 to $1 trillion by 2028. That's monster growth, and if that's accurate, the long term will still be extremely promising. Therefore, it doesn't matter what happens to the price after the first quarter. The company's data center sector has earned $115 billion over the last 12 months, meaning that NVIDIA receives almost 30% of all data center infrastructure spending. Data center GPU sales would bring in $300 billion if Huang's $1 trillion estimate comes to pass, and his business can keep a 30% control over that expenditure. It would be a strong stock with that kind of growth. NVIDIA is still the industry leader in GPUs, and with so much AI infrastructure yet to be developed, it's a great investment, even if expectations don't live up to that impressive number. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Arguably the most important name in all the markets these days. Jeff, happy Friday. What's the latest?
Happy Friday, and I agree. I think an important name and an important story today, which is the reports coming out of Reuters that the company plans to release a downgraded version of their H20 AI chip for distribution to China by July. This, of course, is just another push for NVIDIA to try to keep that exposure in the competitive and growing AI market outside the U.S. At the same time, the company has to continue to fall in line with those U.S. restrictions on the level of advanced chips that they're shipping. The U.S., of course, restricted exports on NVIDIA's most sophisticated chips back in 2022. Concerns over military applications. The H20 was introduced and exported in 2023. And the H20 chip is not as fast as a lot of the AI model chips that NVIDIA has, but it's very competitive. And one of the things it does very well is help those AI models create those answers. U.S. officials told NVIDIA last month that the product would require an export license. It's unclear how many, if any, of those licenses the U.S. will give out. NVIDIA's CEO, we know, has visited Beijing since then, probably to try to really show that growth importance to the company in China. The changes from the original H20 are probably going to include things like a reduced memory capacity. Big name companies, Baba, Tencent, ByteDance, all big names that order these H20 chips. And it's worth noting, China accounted for almost 13% of NVIDIA's total sales last year. So a very important revenue stream for them.
No doubt about it. And I'm hearing that story. It sounds like a positive update, but you'll look at NVIDIA and it didn't even really move that much on the news headline, and it's been weak all morning into the afternoon. So a little bit of weakness, but of course we know NVIDIA jumped quite a bit earlier in the week on some of those AI diffusion rule headlines that came out. Jeff Pierce, you have a great weekend, and thanks as always for stopping by. The latest in NVIDIA and this new potentially downgraded H20 chip available for
NVIDIA is still the industry leader in GPUs, and with so much AI infrastructure yet to be developed, it's a great investment, even if expectations don't live up to that impressive number. Technology, which also speeds up data collecting and analysis and makes results instantly accessible. AI-driven language matrices are enabling communication between humans and machines as well as between individuals from different nations. Imagine a digital world where computer coding is no longer necessary. AI-capable interfaces allow system operators to enter commands and questions in natural language and receive feedback in the same manner. The potential here is astounding, and we've probably only scratched its surface. Daniel Ives, an analyst for Wedbush, describes the enormity of the AI revolution that is currently taking place. Since we believe the AI revolution to be the largest technological advancement in more than 40 years, we have talked about it non-stop during the past few years. According to Ives, more industries are using AI to solve complex problems and optimize business processes by utilizing sophisticated algorithms, machine learning, and data analysis techniques to obtain insightful information and automate decision-making. The global AI market is predicted to reach $407 billion by 2027 and $181 trillion by 2030, representing a 36% CAGR. Since 90% of the world's data was created in the last 2 years alone, and the world generates about 400 terabytes of data every day, more businesses are looking to use their datasets to power AI initiatives that will increase operational efficiencies by automating repetitive, routine tasks, the analyst continued. Ives goes on to offer a number of suggestions, including which AI stocks are the best to purchase as the market becomes more competitive. He believes that investors will be able to profit from the stock. NVIDIA, a semiconductor leader, is one of his choices. NVIDIA is enormous in every way. With a market valuation of $2.85 trillion, the Semiconductor Corporation is the third largest publicly traded company on Wall Street and is a Magnificent Seven stock, one of the mega-cap tech companies that has led the market in recent years. NVIDIA's name was established by its graphics processor units, GPUs, which were first created for high-end computer gaming but were crucial to the company's success when the AI boom began. NVIDIA, which had created the first GPUs in 1999, had an automatic advantage as a manufacturer and supplier of the precise hardware required to enable the AI boom because the GPU chips had the processing power and capacity to run the newest AI applications. The outcome is evident in the share price of the company, which has increased by an incredible 593% in the last 3 years for NVIDIA. A number of recent advancements demonstrate how NVIDIA continues to lead the way in AI technology. In order to accelerate the creation of the newest agentic AI applications, NVIDIA and Oracle are first collaborating to connect NVIDIA's accelerated computing, which is inherent in its most recent Blackwell processors, with Oracle's generative AI services. In order to focus its efforts on the advancements in quantum computing, NVIDIA is also establishing a new research and development facility in Boston. To enable rapid quantum supercomputing, the R&D Center will concentrate on fusing the most advanced quantum computing hardware with AI-powered supercomputers. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
You know, Andy, I wonder, because the numbers coming out of CapEx from all the big hyperscalers didn't drop off at all. Matter of fact, it increased, right? The question is there a Palantir moment in NVIDIA's future? Is there where they stop selling to hyperscalers and sell to everyone, every single person, right? Is there some moment that takes this stock back up to crazy, popularity levels again? Because it seems like just complacency breeds contempt on this name, and they're so used to it being good that they're bored with it. When the numbers keep coming in, they've got a Rubin chip sitting in the future waiting behind the Blackwell chip that they claim is sold out, and all the numbers just keep getting better. You've got good news out of pulling back the Biden laws about who they can sell to and changing the H20 chip for China. There is some good news, but is there that moment coming, Andy? I guess that's what I'm asking.
Yeah, I think there is, but I think it's probably a little ways out. They have been absolutely inundated with orders, the kind of gold rush that, even the genius executors at NVIDIA, and I do think these are some of the best executive team potentially in the world, even they couldn't have seen coming what happened. And so they're playing catch up in terms of every product that they make sells out before they can produce it. They are very good at reinvesting in technology. They understand that they have to stay ahead. They've proven that over, well over a decade in terms of innovation. And so I think eventually this company is the best bet for a company that comes out with, like you said, that kind of mom and pop chip that allows every Apple laptop to be as powerful as the data centers that they're selling today. Is that 1 year, 2 years away? Probably not. It's probably 5 to 10 years away. But if you're going to pick one company that's going to be most likely to achieve something truly revolutionary and truly democratize these capabilities, you'd have to put your money on NVIDIA, not just because they're the leader right now, but because historically they have shown an absolutely impeccable approach to innovating and reinvesting the profits that they make in the next generation of chips and technology. And I think they'll continue to do that.
Yeah, I want the Jetsons, and I think NVIDIA is going to be right in the mix there, if not leading the charge here, Andy. But you look at this on a longer term. I mean, NVIDIA's had a spectacular run at this point. Here's a 3-year chart. I mean, the stock was under $11, 2.5, 3 years ago. At this point. So it's had a good run. Valuations have come down as stocks pulled back about 24% from its all-time highs. Are investors missing out on this name right now, Andy, or is this an opportunity according to your data?
Yeah, I think it really depends on your time frame. I think if your time frame is, 6 weeks or 6 months, then anything's possible. It's a highly volatile name. There's geopolitical reasons that investors may get in or out of the stock. I think if your time frame is, 1 year, 3 years, 10 years, then every single day that the stock is on sale is an opportunity, and that's the way to look at it. And you just dollar cost average into one of the best companies in the best spaces with the best technology and best executive team in the world, and just buy it, put it away, and don't think about it. I think it's really just a matter of time frame. There's extreme volatility in this name, along with all of the Mag 7. We've seen that. That will likely continue for the foreseeable future. But long term, when you're an owner of the best assets in the world, you can sleep pretty easy at night just adding to your position.
Maybe it's Amazon from 20 years ago. Who knows, at this point. Apple from 20 years ago. All right.
Last but not least, NVIDIA revealed this month that Cadence, a supercomputer technology provider, has chosen to use its most recent Blackwell chipsets in its newest Millennium M2000 supercomputer. New drug candidate development, digital twin simulations, semiconductor design, and many other supercomputing domains benefit from the combination of NVIDIA's CPUs with Cadence's hardware. These actions are only the beginning, much like with NVIDIA's original GPU, which was created to improve gaming interfaces. It's impossible to predict what the next chip technology will enable. For the time being, we should highlight that NVIDIA's data center business, which is closely related to the AI industry, generated $35.6 billion in fiscal 4Q25, which concluded on January 26th of this year. This represents a 93% year-over-year increase and approximately 90% of the company's overall revenue for the quarter. With $39.3 billion in total sales in fiscal 4Q25, NVIDIA exceeded the projection by $1.19 billion. The business's non-GAAP EPS of 89 cents, or 4 cents per share, was more than anticipated. NVIDIA is anticipated to report fiscal 1Q26 earnings later this month with revenues of at least $43 billion and an ADJ, EPS of $0.89. According to Daniel Ives and the Wedbush team, NVIDIA's biggest advantage is its extensive lead in the GPU market, which is creating new opportunities for the business. Gaming and data center applications are only two of the many high-growth industries where NVIDIA continues to be the unchallenged top supplier of GPUs. Additionally, the business has established a solid foothold in the nascent market for autonomous driving solutions, which should pay off when the technology gains traction. With the support of growing Blackwell projects and significant private and public AI investment, we believe NVIDIA's intermediate-term growth profile will likely follow more general positive consumption and investment trends in these sectors. Wedbush has NVIDIA, which Ives' colleague and five-star analyst Matt Bryson covers, an outperform, or buy, rating. The company has a $175 price target, which suggests a 49% one-year upside potential. NVIDIA has a strong buy consensus rating based on 40 recent analyst ratings, which break down to 34 buys, 5 holds, and 1 sell. With an average price objective of $164.35, the shares are presently trading at $117.37, indicating a 40% rise over the next 12 months. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
What's your big picture as you talk about implied volatility? Right now, here today, I'll bring up the VIX, which is at 2210.
Yeah.
We've become a little bit more calm, a little desensitized to every single headline, though we're still a headline-driven market.
Yeah.
Some of your market thoughts?
I actually think that 22 VIX is perhaps slightly being a little bit too complacent right now. We have a lot of things ahead. The UK deal yesterday obviously was one of the primary drivers of VIX continuing to retreat. But we have some big trade deals coming up. We're going potentially to the negotiation table with China. I don't particularly think that that's going to be smooth sailing, through. And I think the market is kind of pricing in that everything's going to be smooth sailing going forward. I think there's a lot of cautious optimism right now that is good. We had some pretty good earnings recently, but the problem I think is that I think there's likely going to be some bumps in the road that the market is not pricing in right now, and I think my preference is to be long vol and potentially even adding a little bit of bearish exposure, especially with the SPX, S&P 500 approaching 5,800. That's a major resistance level that we haven't gotten above, and I think the risk to reward right now favors slightly to the bearish side, given that we're just against that 5,800 level, and the really only support down there is around 5,100 to the downside. So that risk to reward right now is skewed a little bit to the downside.
And I would say, someone listening to you would say, you know what, he makes sense. I'll be long on volatility. We are somewhat complacent, and something's going to break some point. There's so much with China. We have the possibility of some talks this weekend. And the big picture that we have run up. We're up 12 of 14 days. Just this month, I'll say 1 month, we're up about almost 4% on the S&P 500. So it has been quite the momentum back up with this recovery off the lows. But the bearish move, do you think that the bottom is in? You don't have to answer that, but if you think a bearish pullback wouldn't be unusual to see a little bit of a pullback.
In my opinion, I don't think the bottom's in. I think there could be, I still think that there's the black swan event that we haven't necessarily seen just yet. I think that there's a possibility that the market is not pricing in right now that we haven't bottomed yet.
That is very interesting, and that too could be very much a possibility, a black swan event. How could we possibly know? There's so much in the mix right now. And just the final thought, do you think that would be short-lived? Would that be, depending on what the black swan event is, but the last one certainly provided a great opportunity for buying when we were at 4,835 on the S&P. If you bought around that area, you already made a good amount of money.
Yeah, I completely agree. We were looking at 5,100 as that major support level. We were buying around those levels. What really spooked me in the recent sell-off here is the Treasury market, and what the perceived risk-free nature of the Treasury market, and whether that is a bigger concern for us in the long run, because that is a major financial crisis if we do start to see that as an issue. So that's the black swan event that I'm hoping doesn't happen. But that's
the bond market's already, we're seeing bonds selling off again. Yields have been going higher.
Exactly.
Is there that, I don't want to say anti-American, but sell America, buy less America?
Sell America is happening right now, so it's something that we have to be aware of. Look at the U.S. dollar. The U.S. dollar has not recovered with equities and bonds, and I think that's something we need to pay attention to right now.
Yeah.